Let me ask you a simple question. When markets fall sharply, what do most retirees instinctively want to do? They want to get out. They want to sell, move to cash, and wait until things feel safe again. That instinct, that emotional reaction, is the single biggest mistake retirees make in a bear market. Today, I'm going to explain exactly why, what it really costs retirees, and most importantly, what to do instead. Stay with me, because this decision can determine whether your retirement lasts or slowly collapses. Quick reminder, this content is for educational purposes only, not individualized financial advice. Always consult a qualified professional before making financial decisions. That being said, let's get into it. If you're retired or close to retirement, market downturns feel different. You're no longer just watching numbers, you're watching your income, your security, and your peace of mind. That's why bear markets are so dangerous. Not because of the market itself, but because of how retirees respond to it. So let's break this down. The number one mistake retirees make in a bear market is panic selling. That's after losses have already occurred, not at the top, not before the decline, but after fear takes over. Here's why this is so damaging. Number one, you lock in losses. Losses that were once temporary suddenly become permanent. Number two, you also miss the recovery. And historically, the recovery often happens faster than people expect. And number three, you permanently reduce your future income potential. Retirees don't get do-overs, and that's the problem. Time is no longer your biggest asset. Consistency and protection are. If you're still working, bear markets are painful but manageable. You're still earning. You're still contributing. You still have the magic thing called time. Retirees face something very different. It's called sequence of returns risk. This means if you experience negative returns early in retirement while taking withdrawals, your portfolio may never, ever recover, even if markets eventually do. You're not just losing value, you're pulling money out of a shrinking account. That's a dangerous combination. This is why two retirees with the same average return can end up with completely different outcomes. Let me give you a very simple example. Two retirees, same age, same portfolio size. One panics during a bear market and moves everything to cash. The other allows and follows the plan and stays properly positioned. The first retiree feels relief for a while, then the market rebounds. They wait, and they wait, and eventually get back in after prices are higher. They didn't avoid risk, they just delayed growth. The second retiree didn't enjoy the downturn, but they didn't destroy their plan. Over time, that difference compounds into hundreds of thousands of dollars. So if panic selling is the mistake, what's the solution? It's not doing nothing, and it's not riding it out blindly. The solution is having a retirement income strategy that separates growth from income. That means money needed in the next 1 to 5 years should not be exposed to market volatility. Income should be reliable, predictable, stress tested. Just like I write about in my book, The Retirement Navigator, growth assets should be positioned for long-term recovery, not short-term fear. When income is secure, market drops become uncomfortable but not catastrophic. Fear comes from uncertainty. Planning removes uncertainty. And let me be very clear here. Bear markets are normal, some much longer than others. However, they are temporary. They are expected. What's not normal is retiring without a plan that's specifically designed for your situation. The market didn't ruin most retirements. Behavior did. And behavior is driven by fear, which thrives when there's no structure in place. If you're retired or retiring soon, the question isn't whether another bear market will come. It's whether you'll be prepared. Remember, a calm retiree isn't lucky, they're prepared. If you found this helpful, like and subscribe for weekly videos on retirement planning, tax strategy, and long-term financial security. And if you want deeper guidance, check the resources below and look for our free report. We'll see you in our next video.